Kathy. I'm with Tax Magic Podcast, and we have a very special guest again. And I thank her very much for joining us to ask more questions. Becky Robbins. Thank you for joining us today.
Thank you, because it's my privilege because I'm the one getting all the answers. So thank you for that.
Yes, but I get the advertising,
Well,
and
then we
beautiful
all then
blondes
we all
always help.
win. There's so many good things about this fun thing because money is I love money, but it's like the whole keeping track of it and how to spend it and all makes me nervous. So I have some questions about the receipts. Can we go back to that for a minute?
It's a great idea because most people do. So,
Okay, so
what's your next one?
like if I like what do I need to do with what do I need to write on the receipt when I'm like at a restaurant? Like if I'm by myself, do I need to save the receipt?
Um,
If I have somebody with me, if somebody pays, we pay half, all of that stuff.
okay. Technically, if it's just you, the IRS will probably deny it because what was the business purpose of taking you to dinner? Unless you happen to be writing a review on that restaurant for a blog
Hmm.
at a healthy food restaurant. This is what happened. This is who was there. This is the blog I wrote for that food service, the food process, the food presentation. And if you write a blog or you include it in your ageless freedom technical issues on
Yep.
how to eat properly, how important is it to eat properly when you're out? Here's how you do it. I went to the pizza parlor and nothing was good for you there. So we couldn't eat there. We had to go somewhere else. So if you turn it into that, eating single or alone would help you. Most of the time, they're going to look at what you discussed, who was there, and where you were. I was an expert witness for a divorce case several years ago, and the opposing party would take um, to the strip club and meet people at the strip. That's not deductible no matter what you do. It was specific in the code. Strip clubs are out. And so we were able to show that he couldn't write those off, even though he tried. And but if you go to season 52 and you're eating dinner with a prospective guest on your show, what did you discuss? First, you write down, you flip it. I always say flip it over and write who was with you, what you discussed, and the date. I usually put the date just because I'm anal that way. And basically looking at who, what, where, and when. And if you've got that on that receipt, you're going to win. Now, keep in mind, you get the haircuts on food. You can only deduct 50% of what you spend. So
Hmm.
if you split it with somebody, you're only going to be able to take half of it, and then you'll take a half of your portion. Most people don't split. Most people pay, I'll pay this time, you pay next time, kind of thing. But that would be what you would do. I
What
did a
about
little,
paying cash?
well, cash is good. You have to, if you pay cash, you just have to write cash on the ticket. And when you give it to your bookkeeper, she puts it in as a cash contribution.
When is it better to pay with cash versus a credit card
Well,
or vice versa?
I love to pay with cash simply because I think if we don't start using cash more, they're going to eliminate it altogether and make us all use debit and credit cards and be able to track absolutely everything we do, everywhere we go. And I'm not real fond of that.
Oh my gosh, me either. Well, they quit making pennies now, I hear.
Correct. And soon they will quit making nickels, dimes, quarters, dollars. That's my belief. I mean,
Oh
I
my
don't have
goodness.
evidence of it, but I do know if you don't use it, you lose it.
So when you say
So,
what you discussed, like how much detail about what did I discuss with somebody?
as much as you think will win an argument if somebody asked you. Um, I do a lot of these, and mine is usually something like tax planning on this year or tax planning versus a new LLC, something like that, where it will jog my memory and I can tell them, by the way, we discuss this, what state, what department, what everything, and then regurgitate it to them. And then I usually, if they ask me anything about it, I'll usually go, do you want to call the person and talk to them? Because I'm happy to give you the phone number. And they kind of just look at me and go, yeah, no, we don't need to go that far. But I'm happy to do it because it's legit.
Yeah.
Totally
Okay.
legit.
Okay.
And
so maybe if I don't think it's deductible, I don't need to save a receipt.
I would save it anyway.
Okay.
And I would just put it in a different envelope, maybe. Put
Okay.
it in an envelope that says question mark.
Okay.
Maybe it's deductible. And then
Okay.
I did a reel back when I started this, and I'm wearing a pink hat and I have a pew pew unicorn gun that I shoot the unicorn gun and I go, I missed. Don't miss a deduction by doing it wrong. And that's the important thing. If you have the receipt, and if you don't have the receipt and you decide later that, man, that could have been deductible, but I don't have the receipt anymore, odds are you'll lose it if you are audited. Always prepare for the audit and having to explain it. Always. And
it sounds to me like documenting everything is so important.
Correct.
And in a future one, I want to talk to you about investments, because I made some investments several years ago, and we're trying to find where was the source. Did someone else wire the money for me? I don't have that. And it was a big investment and it went south. And I'm trying to figure all of that out. So it feels to me like you're saying document your life.
Correct. A monetary life anyway. And especially for things like investments, anything that has a life of more than a year, those are items that the IRS can go back to the beginning and look at. And the fact that you can't find where it came from, that's a problem that your CPA should have handled prior, because I've seen your books, and your books had everything documented in them, not in the right category and not in the right place, but they had, your investment account. They had your business account. And they said you can't take any of it. And then one of them, they let you take all this stuff. And I'm going, that doesn't even belong on that one.
Right.
He didn't even ask you. And so asking questions is super important. And if I don't ask the question, people need to volunteer it. So, because I don't know what I don't know, just like you don't know what you don't know.
Exactly. And you know what? I think, Kathy, that's why it's so, I love that you're archiving these so that I can go back and find ones that, like, okay, this was about that thing, that was about that thing. Because in a future one, I would love to come back and ask you questions about like LLCs and all of that kind of stuff, and trusts and all of that.
Love it.
Because yeah.
I think we should make this a series where every couple weeks we throw in another one, or once a month.
Do you know, that would be a gift,
great.
A gift to me and a whole bunch of other people I know, because just things like trusts, I have a trust, but now I'm finding out through my Cindy, the woman who's doing all of our accounting, that there's issues with a trust, and tax basis when you sell the property, if when you die, and all, like, oh my gosh, I'm getting it. I'm not going to say I'm going to getting at a certain age, because I don't believe in that.
No.
Because I'm ageless freedom.
Right.
But the truth is, we need to know what we need to know. Like you just said, I don't know what I don't know, and that makes me not sleep at night, honestly.
Right. And most people go, I have a trust. Well, it's what kind of trust? Well, I don't know, but I have a trust. And the reality is, a revocable living trust is not what 90% of the people on the internet say it is.
Including me.
It's not. Yeah.
I don't know either.
No, but these guys are pawning themselves off as professionals.
Absolutely.
It's not asset protection. What a revocable living trust does, and it does it very, very well when you fund it properly, is transfer assets upon death. It avoids probate. That's what it does. That's what it's intended to do. It's not intended to protect your assets. That would be, land trusts. That would be LLCs with different ownership. Will be C corps. Those are what protect your assets.
So
not
you're going to help me so much with this because I have an estate plan, but all of this, and I have several LLCs, as you know,
right.
and I don't even the whole thing. I thought it protected my assets so that when I die and I leave the house I own and don't live in
Right.
to my eldest son, that
Right.
then he's okay. There's no problem with that, but that is not true anymore.
No, it was never true. That's the thing.
So I
If it's
was
in the
told it was true. See?
no,
Oh my
no,
gosh, I'm so
if it's in the title of the revocable living trust and it's not funded properly, if you
oh my
didn't put the
gosh.
title into the living trust,
Got
it's not in
and
the
then
trust.
insurance, then you can't get insurance. They
But
say
you
they won't
can.
insure.
You can because it's a revocable living trust, which is you until you pass away.
Yeah.
You can change the beneficiaries with a swipe of a pen.
And then if you live in the state of California and now we can't get insurance anymore for homes. I mean, they're doing crazy stuff out here.
Welcome to
So,
Florida. You can't get it here either because of hurricanes.
oh
So
my gosh.
you're kind of screwed one way or the other.
Oh,
But
I'm so happy that we're doing this, Kathy, because it's a relief to me.
100%. Well, thank you, Becky. Let's wrap this up for this one, and we'll come have you back in a couple of weeks and finish it. And well,
Thank
actually,
you.
probably start some more, not even finish it.
I know,
But
because by then, people are going to see this and then ask me to ask you questions.
that's great. Ask away. They could go to YouTube and subscribe and ask questions there. Join the collective.
Where do we go? Where do we go on YouTube to find you?
Tax Magic Podcast.
Okay, deal.
Yep, do it. And because remember, the more you know, the less you
The less I know.
That's right. And we're going to take you from what? Tax Tragic to
Tax Magic.
boom.
This content is for educational and entertainment purposes only and does not constitute professional advice of any kind. Always consult with your tax professional. Be sure to read this full disclosure. Listener discretion is advised.